Okay, so get this. JPMorgan just dropped a cool $102 million on an Ethereum bet. But here's the crazy part. They didn't buy a single ETH token. Nope. They used a clever little Wall Street backdoor, and we know this because it's all right there in their official SEC filings. So today we're going to pull back the curtain and show you exactly how they did it, and more importantly, what it means for you.
So you've got to ask, right? How does a giant like JPMorgan, a bank, get a massive piece of the crypto action without getting tangled up in all the regulatory headaches? Well, the answer isn't where you'd think. It's not on some crypto exchange. It's right on the good old stock market.
And let's just let that number sink in for a second. $102 million. Look, that's not just a little experiment or some pocket change. No way. This is a serious, strategic move. It's a huge vote of confidence in where they think Ethereum is headed.
Now, I know what you might be thinking. Is this just some rumor floating around? Absolutely not. This is all coming straight from the horse's mouth. The official public SEC filings that these big firms have to submit. It's all on the record. All right, let's dig into the actual evidence.
Okay, first up, we're diving straight into the document itself. It's called a 13FHR filing. Think of it as the playbook for the big money. And boom, here it is, right in black and white. JPMorgan Chase holds almost 2 million shares of a company called BitMine Immersion Technologies. Value, roughly 102 million bucks. But here's where it gets really interesting. The what they bought is the key to this whole thing. So what on earth is BitMine? And how is buying their stock the same as buying Ethereum? Let's break down this whole indirect exposure thing, because it's the go-to playbook for Wall Street when they want to get into crypto.
All right, real quick, what is this 13F thing? Basically, if you're an investment manager playing with over $100 million, you have to file this report every quarter. It's like being forced to show your hand. It gives us a peek into what the smartest people in the room are doing with their money.
And this right here is the heart of the strategy. You've got two choices, right? You can go the direct route, buy ETH tokens, deal with crypto wallets, exchanges, all that stuff. Or you can do what JPMorgan did, the indirect route. You just buy stock in a regular company that holds a ton of ETH. For a big bank, this is a no-brainer. They get to use their normal stockbrokers, stay in their regulatory lane. It's just easier. Now, there is a catch. The stock price won't perfectly track the price of ETH because you've also got the company's own performance mixed in there. But for them, it's a trade-off they're willing to make. So the company at the center of this whole play is BitMine Immersion Technologies. And you need to understand, this isn't some company that just dabbles in crypto. Oh no, they went all in and completely reshaped their entire business to focus on one single thing. You see, just a little while ago, BitMine was a Bitcoin mining company. Pretty standard. But then, in 2025, they did a complete 180, a total pivot. They stopped mining Bitcoin and switched their entire game plan to just one thing, buying and holding as much Ethereum as they possibly could. This basically turned them into a public company whose only job is to own ETH. And that, my friends, makes them the perfect vehicle for a big bank like JPMorgan. And boy, were they aggressive about it. BitMine is now sitting on over 3.24 million Ether. That's a huge stash, making them one of the biggest corporate holders out there. So here's the bottom line for any investor. When you buy a share of BitMine, you're not just buying a stock. You're buying a piece of a giant, professionally managed Ethereum fund that happens to be traded on the stock market. Okay, so let's pull back for a second. This $102 million move, it's not happening in a vacuum. It's actually a huge clue that points to a much bigger trend that's picking up speed. Wall Street is officially embracing crypto. And let's be super clear here. This is a big deal. The wall that used to separate traditional finance and crypto, it's not just cracking anymore. It's being taken down, brick by brick. Just think about the dominoes that have fallen this year alone. First, we got the green light for spot Ethereum ETFs, which was huge. Then JPMorgan, the same company we're talking about, started letting clients use crypto as collateral for loans. And now we're seeing these massive 9-figure stock purchases. You can just feel the momentum building, can't you? You know, sometimes the biggest signal isn't what these giants do, but what their CEOs say. And we're seeing a massive change in tune, even from people who used to be the biggest crypto haters out there. I'm talking about Jamie Dimon, the CEO of JPMorgan. This is a guy who was famous for bashing crypto, but now he's out there saying stuff like this. When the guy who was probably the biggest crypto skeptic on Wall Street starts defending your right to buy it, Well, that's not just a small change, that's a seismic shift. It's him basically telling the whole world, okay, crypto isn't going away, it's here to stay. And it's not just JPMorgan jumping on this train. Look at this. Other big players are in on it too. Cathie Wood's ARK Invest, the firm that's always looking for the next big thing, they've also been snapping up shares of BitMine, over 240,000 of them. So this isn't just one bank making a wild bet. It's a shared strategy amongst some of the heaviest hitters in finance.
All right, so the big question for all of us is, with all this big money pouring in, what does it mean for the price of Ethereum? Let's talk about the future. Well, who better to ask than the CEO of the company at the center of it all, right? Tom Lee from BitMine. He's on the record saying he believes Ethereum could hit around $7,000 by the end of 2025. And his reasoning is pretty solid. He's not just talking about the network growing, he's saying the market is healthier now because all the risky, borrowed money, what the pros call excess leverage, has been washed out. Just to put that into perspective, take a look at this. Here's where the price is now. And here's where he thinks it could go by the end of the year. This really shows you the kind of thinking behind these big institutional moves. They're not playing for small wins. They are positioning themselves for some serious upside. Okay, let's wrap this up with the key takeaways, the so what for you as an investor. First, the big money is here, it's growing, and they're getting creative. Second, these publicly traded companies like BitMine, they're the main highway for Wall Street to get into crypto safely. Third, listen to what the CEOs are saying. Their words can predict the market's next move. And finally, a $102 million investment from a bank like JPMorgan, that's about as strong a signal of long-term belief as you're ever going to get. Which brings us to one final massive question. When you see all of this, the big investments, the new financial products, the money flowing freely between these two worlds, are we watching in real time as that line between Wall Street and crypto just disappears? That, right there, is the multi-trillion-dollar question we'll see answered in the next few years.